Hey, so this video, we're going to break down kind of a traditional financial vehicle, the Roth IRA versus real estate investing, just to kind of show how much quicker you can reach that financial freedom later down the road. The net worth and the passive income are so powerful. In a regular Roth IRA, you can put in $6,000, $6,500 a year. There's a lot of rules, whatever. To get from today to $1 million with a standard rate of return in a Roth IRA, it would take on average 35 years. That means from 25 to 60, 25, 60, maxing it out year over year, not touching it, not doing anything, letting it compound and grow, you would have $1 million in your Roth IRA roughly. According to the 4% rule, which is how much you can draw without touching your principal and running out of money, is 4%. So $1 million in your Roth IRA, you could gain $40,000 a year of income. $40,000 a year of income is not a lot for retirement. So we'll kind of use this person A versus person B to kind of show how powerful this can work. So we're going to go to the whiteboard to show you. All right. So person A that we just described, Roth IRA. We'll keep the number simple, 6K a year, 35 years, $1 million. That's great. 4% rule, 40K a year in cash flow. Person B saves that same 6K for 4 years for a $24,000 down payment on a rental property. The rental property, got to pull up my numbers here for this particular example. Again, these are loose numbers simply for demonstration purposes. Obviously, these are going to be max. The real numbers are going to be much lower because you're going to have capital expenses, large repairs. You got to pay your property management. You have a vacancy maintenance reserve. You're going to have to turn tenants. Okay, this is purely for illustration purposes. So please don't blast me. If you want exact numbers, that's what the rental property calculator is for. If you want the rental property calculator, send me a message. Say, give me the rental property calculator. I'll send it to you absolutely free. But this is mainly for demonstration. So saves up $24,000 down payment, purchases a $200,000 house. So $200K house with $24K down. So this opens up a $176,000 loan, 6.5% interest, 30-year fixed. And we're just going to say it rents for $2,100 a month. So over the next 30 years, what is this person going to get? So this person, their mortgage payment is $1,459 and the rent is $2,100. Again, we're not having reserves and stuff. We're just doing straight rent over mortgage. And mortgage includes mortgage, your insurance, and your taxes. So mortgage over insurance. This gives them a monthly cash flow. Again, the profit centers, cash flow is going to be $641 per month, or $76.92 per year. The appreciation, of course, 3 to 4%, depending on your region price point. In this example, I put in 3% over the course of 30 years. So, time machine, 30 years goes by. Let me make sure it's still on the screen. There we go. 30 years goes by. What does person B have with this house? Well, the loan is paid off, so it doesn't have a mortgage payment anymore, and the house appreciated in value. So assuming 3% appreciation over 30 years, the house is worth $728K. Now, of course, that $728K in today's dollars, we don't know what the value is going to look like in 30 years and how's that dollar going to spend. Again, not variables we're discussing. We're just going apples for apples, what this looks like. The house worth $728,000. Once you pay off the loan, now you're getting $1,834 a month or $22K per year. And you're probably thinking, wait a second, up here we got $40K, down here we're getting $22K. So like, that's not a good deal. Let me remind you, how much money did we put in? $6K times 30 years, $180K. Right? Did I do that math right? Yes. How much money did we put in this bottom scenario? $24K one time. And it took 4 years of saving $6K to do that. So what if person B saved for another 4 years after they bought this one? They used this $641 a month or $71.92 a year. What if they did this times 4 years and did it again? Wash, rinse, repeat. What if they took that $71.92, waited another 4 years, bought another property? So now they're cash flowing two properties. So if they just doubled that situation, so now they're cash flowing $1,200 a month. $1,200 a month. Then in 30 years, well, now you're going to have a $1.4 million asset. $1.4 million asset. And if we're just doing simple doubling, instead of cash flowing $1,834 a month, we're going to be cash flowing $3,600 a month. It's 3,600 by 12. I should have done this before. Sorry. Oh, look at that. 43,200. And again, just a quick reminder, how much money did we put in initially? What did we start with? We started with $24K. Got one property. Instead of using the cash flow for our life, we saved it, saved up another down payment, purchased property number 2. Fast forward. So again, initial investment, $24,000. That's it. So then fast forward 30 years, we now own $1.4 million in assets. We're getting $3,600 a month cash flow, $43,000, $200 a year. Folks, this is off of 2 rental properties. Imagine if you had 4 or 10. These numbers get very crazy very fast. And just a note, I did not increase the rent on any of these properties. Rent appreciation also is about 2 to 4% year on year. I kept them stable for this whole 30-year period, just for demonstration purposes. Okay, so what if this was half? What if it was only half as effective? Okay, so I turned my $24,000 into a $700,000 between 2 assets, and we're getting $1,800 a month, and we're getting, $22K a year. Okay, you still turned $24,000 into huge cash flowing asset. That's just what I wanted to break down in this video and just show that. Hang on, let me stop sharing my screen here. Yeah, so the whole purpose of this video was just to kind of demonstrate how you can do your Roth IRA and put in 180K over 30 years and get zero benefit now because you're not supposed to touch it until later. You have $1 million. Maybe you'll be able to get 40,000 off of it, or you can save up $24,000. And if your short-term goals are to get more cash flow, boom, you got your cash flow right there, right away, right now, not later. Of course, then you're not going to be able to save and get another down payment to snowball that into another property. But it depends on what your goals are. If you say, man, I just want to keep I don't want to take any money. I just want to keep snowballing it forward. You can see how quickly things can get out of hand, but in a very good way. If this interests you at all, please reach out to me or share your personal story about what your portfolio looks like or what motivated you to get started. I would love to hear that. Thanks for watching.